Hey, good morning, everyone. How are you? Hope you had a good night's sleep. You're ready for a big day in the market today. Looks like those futures are owned by the bulls yet, so maybe we see some follow through coming out of the overall market. Just a reminder that we do have some Fed minutes coming out Wednesday, so could be a game changer. Never know. I've got 5 or 6 trades I'm looking at adding to the watch list, and then I have a question from somebody here I'd like to answer out here, so I'm gonna do that as well at the end here. So let's start with the market. Right now, if I looked at the SPY, just the chart, just take the chart. They just don't get any more bullish than this. I've heard from several people that have been shorting and they've gotten into trouble. I've also heard from people that has been shorting and done very well. So don't think just because you short, everything is going to be horrible here. There's been some good shorts. I've got some set up. If this market starts to roll, I've got some scans set up and I'll be right on top of them. But there has been a few people that basically, they feel that the market is going to pretty much die, and they've shorted, and they're in the hurt locker right now. Good rule of thumb: never short a bullish market. And this chart here looks bullish. Doesn't matter what we think. Doesn't matter what we think's going to happen because of, say, inflation. Doesn't matter what we think is going to happen, say, because of COVID. It doesn't matter what we think is going to happen if rates go higher. It doesn't matter what we think. What we trade is the chart. And right now, this is a very bullish chart in the SPY. Here's SPX right here. Very bullish chart in the SPX. So just don't see why we would want to be short at this time. So let's take a look at some charts here I'm adding to the watch list. Then I want to go in and answer a question about 2 charts that somebody sent me. So ERX, if you're, I've got a couple other oil charts on here, at least one other oil chart on here, energy chart. And if you don't know which one to trade, sometimes just trading the ETF is the way to go here. And you can, let's just get rid of all this. You can see that ERX has rallied up, and then it's pulled back over the last month and a half, 2 months maybe. And we can draw a line here like that, and you can see we've started to break out. Broke out yesterday of the 50-period moving average. And here, let me make this a little darker. Let me put that 50 up there. That's a little darker right there. See a little better. So let's do that. There we go. We came off the 200-period moving average. We rally up when we pull back, and then here's this big bullish candle yesterday. This is a terrific little chart pattern that suggests bulls are in charge right through here. Let's make that bigger too. Here we go. Sorry, a little disorganized, I guess, this morning. Not ready. First of all, we've got this nice bounce off the 200. We've got a great run to the upside. We tested the 50-period moving average right there, pulled back, and now we're popping up. Great candle yesterday. Take yesterday's candle. Look at that volume on that thing yesterday. This is a sign. Well, it is no guarantee, that's for sure. But this is the type of chart, if you go back and just look at the history of this chart, any chart you want, this type of move here, talking about putting your conditions in order, great conditions here. So now it's just a matter of your entry, how you might enter it, and let's get this going there, real time. So you can see we're moving up a little bit this morning. Now, I'm not one for chasing, but that doesn't mean we can't buy it today if it fits your trade plan. If it doesn't fit your trade plan, let's consider where it might go. So back up to these highs. So we've got to ask yourselves, do we want to put this on our watch list? And do we think that it's going to pull back before it reaches that high? 9 out of 10 times this will happen. 10 out of 10 times we're going to see a pullback. Also, this 30, we'll call it 34 up here. Is the trade over at 34? Probably not. Probably not. Let's come over here and grab this little tool. What is this? Fibonacci retracement lines here. Take this low, just run up to that high. Come down here and we'll just go to this low right here. There's some, if somebody's looking for targets, there's some pretty good targets up there. This way maybe you can, I'm going to skip one. That way maybe you can see what the possibilities are on that breakout. So this chart pattern, low, high, higher, low, right here, crossing up over the 50, that's a beautiful chart pattern. This line here, downtrend line, crossing up over that downtrend line, that is beautiful, absolutely beautiful. Nothing says we can't get to 38. And let's just take from today to up here at 38. That's 19%. So if we have to wait patiently for a little bit of a pullback to come back into something I'm going to look for is the 3/8 trap. 3/8 trap would be, something like this. I can only guess on this at this point. I can't be exactly right because I can't predict what the candles are going to do. So here's the 8, pulls back into that 3/8 trap here, and then we look for that buy signal. And maybe all of this happens up here. Let me extend this up. Maybe that happens, up here. So here we come back, and now we look for that 3/8 trap to set us up. We're still looking at 38 up here. So the trade is not over just because we get to 34. Let's wait for that setup. This is a great chart pattern that's telegraphing a higher move here. All right, sorry I won't take quite as long on these. FANG, if you're looking at one, an oil chart or wanting one, FANG might be one that you take a look at. It's acting really good here. Let's do this. There we are. Some traders bought yesterday. I know this for a fact. Some traders might buy it today. Other traders might wait till it breaks out. Here we are with that chart pattern that's telegraphing a higher move. So I'm going to do this really quick. That low to a higher low, telegraphing a higher move. Here is MRO. This is not on the list, at least today's list. This is, however, on our master list. And you see, I have targets set up for this one. We did this, I don't know, maybe it was yesterday on Monday's watch list, perhaps. I can't remember now. So let's take this low, high, higher, low. Look at that. Once we break through that 1750, the next marks that I have up here that we may run for is about 19 and 21, 22 up here. SOFI. I think SOFI might be setting up. I like the way this is working here. We've got a nice double bottom in here. And then we have a bit of a little bottom right there, these candles. And then we rally up, we pull back, and here we've broken out on a big stick. Big stick, good volume. Let's do that. Big stick, there's your volume if you're following volume. And now we're putting in a nice little sideways consolidation area. Now, this has got some room, or it's got some area that it needs to chew through before it can get back up to the recent highs, or we'll call it November highs over here. So it needs to get through this whole area right there. We're going to look at price, test, rally up, bit of a test and fail. So that's a good area right there around 1730. We're also approaching the 50 period moving average. And I always have to take that into account. So it may be just a trade up here. Long-term traders, maybe it's a buy and hold, but for swing traders, it may be just a trade of about 14%. And then let it shake out here. Let it shake out, let it, consolidate, set up again, and now we might have that trade back up to that, whatever that high was, November, for another 30% on SOFI. So that we're adding that one to the watch list. AT&T, certainly AT&T and Verizon in the news big time today, this morning, yesterday. Man, the chart looks fantastic. We talked about this a few days ago. Here we have a double bottom. Here we've got a bull kicker gap up. Here we've got a rally. Here we've got a pullback. What a terrific follow through. So is this where we want to buy it? For some traders, absolutely. Other traders might wait for it to pull back just a little bit. Let it settle down maybe. Some traders are going to let it settle down. Some traders are not. And I'm just going to, there's Trader Chuck here, there's Mark here, Tom, Art, John, TD. Those are the names I can see. Everyone here is a little bit different. Everyone's going to look at a chart a little bit differently. Where are you going to buy it? Some traders may say, I wouldn't touch AT&T with a 10-foot pole. Okay. It's your trade. Know where your entry points are. If you don't, this is what we try to help with right here. This is what we try to teach over and over and over. But as far as just reaching out and say, for me to say, well, this is a buy at $25.05. I just can't do that sort of thing. It's not the thing I do. So you've got to develop your entry skills. You've got to develop your trade skills. So anyway, I'm looking at the dotted deuce right here. This is always an area for me to look at as a target, and you can see that we've also matches up with a little price action over here. Another place is going to be the 200 period moving average, and you can say this one also matches up with a little bit of price action over here as well. So I think those are two great targets. Keep in mind that it very well may pull back and rest, which is what I want, and then I can place an entry on a nice little pullback. Bank of America is setting up quite nice. Beautiful. This is another one of those charts that I think are just rocking. Beautiful, beautiful chart. So we'll just take this and draw that down like that. We broke out yesterday. We broke out of the 50 period moving average yesterday. Looks like today we're popping up over yesterday's candle. Where is your entry? Where is your entry? Some people buying it here. Clearly, some people bought it yesterday. Is your entry more of a pullback? It's a game where you only trade against yourself, and you've got to fight yourself on this, and you've got to beat yourself on this. Target-wise, back up to those recent highs. Is it likely to stumble, cough, and sneeze on this November 24th high? I would bet my money it is. And that might be the opportunity that it pulls back, where it pulls back and gives us the opportunity for a better inch. Whoops, what did I just do? Sorry about that. Better entry, and then we'll look for that breakout moving higher. The last one I have here, don't let me forget, I've got a couple questions I want to answer. LSCC, this is also setting up quite nice. Let's just take that off. There we go. See how we broke out? And then look at that nice tight, I guess it's that one. Yeah. Look at that nice tight consolidation, little flag, nice candle Friday. Beautiful charts. Places it might want to run to is where it's been. Targets, things like that, that is seriously the easiest thing in the world to do on a chart. There is nothing easier on a chart is setting up where you think price might go. all you have to do is go look and see where price has been before. It always wants to return. We had a trader here years ago that used to say, to the scene of the crime. And there's the crime right there. Here's the crime right there. They always want to return to the scene of the crime. So beautiful little chart setting up on LSCC. All right, let me grab these questions here. This is a question from somebody by the name of Rob. He has a question about SABR. And I think it's a good question too. Thank you, Rob. I'm going to put up the 34 EMA for this because that's what his question involves. So here's what he says. Quick question on the trap. If the 34 EMA is riding over the 3 and the 8, is that a deal breaker? Example, Sabre and GPS. We'll look at GPS in a minute. So here's Sabre. This is the 34 EMA. Is that a deal breaker? No, it's not a deal breaker. Let's take a look at price action. That's your number one focus, is the price action. Here we've got, there we go, a low, high, higher low. We didn't make a higher high here, but what we did is our Trendicator turned green, our price action just started moving sideways, and it's just building. And then yesterday, beautiful little breakout right here. Absolutely beautiful. This is a great looking chart. It's now a rounded bottom breakout because it's over the 50-period moving average. And we're going to do the same thing we always do. Let's start with putting a couple targets using major moving averages right here. And let's go look for some price action that might also give us a little bit of trouble. I'm going to go with that right there. The dotted deuce here, it also matches up with some great price action. I'm going to leave it right there. So Trendicator's green. The overall trend is up. Overall trend is up. Looking terrific. Nice candle. I think that's an excellent chart. Thank you, Rob. The next one is GPS. Remember, the question is, if the 34 EMA is riding over the 3 and the 8, is that a deal breaker? Well, here's the 34, and here's the 8, and this dotted green line in the background there, that's the 3. Is that a deal breaker? No, it's not a deal breaker. We want to follow price, but we have to respect the fact that there is a moving average there. So, and I follow moving averages an awful lot. Now, this here, back here, was what we call a pinball setup, and the 34 is where you take profits on the pinball setup. So excellent job on the pinball setup. Now what we need to see is follow through. So great candle yesterday, stopped right at the 34 EMA. This is just an inside day. That's a nice, man, what a great entry. What a great risk reward. Here's what I mean. So say if this is bought this morning, right here, and if you're using the T-line for the stop, which you should, based on the pinball setup, because we're still in that pinball setup area here, and being a 3/8 trap. Remember yesterday we talked about the 3/8 trap. Why do we like the chart? We like it because it's in a 3/8 trap, and we would absolutely be in love with the chart if it did this, right? Well, if it did this, we would pretty much hate the chart, wouldn't we? Don't be in it. Don't be in it if it does that. So it just makes sense to use that T-line, or awfully close to it. You can adjust it, using some price action, but awfully close to it. So there's your risk. Now let's look at our reward, and we'll just do that right there. Up to the 50-period moving average is 10%. Up there to the dotted deuce is 30%, and up to the T200 period moving average is over 47%. So right there is what I see as a possible trade area. Realizing that the stock is not going to go straight up. They never do. So now you trade the stock based on your trading rules in there. Anyway, there's my answer on that 34, whether or not it's a deal breaker or not. Thanks, everybody. I'll see everybody back here in about 20 minutes when the market opens up, okay? Thanks for being here, and good morning to everyone. We'll see you.